Toshiba's board has approved a $15 billion offer from a consortium led by a Japanese buyout fund, paving the way for the country's biggest ever take-private deal. Toshiba said that Japan Industrial Partners has offered to buy the group for 4,620 Japanese yen per share, or approximately $35. Shares in Toshiba, Japan's best-known conglomerate, closed at 4,213 Japanese yen on Thursday. The 147-year-old conglomerate will be taken private by a consortium backed by 17 domestic companies and 6 financial institutions. According to people familiar with the matter, the group includes financial services group ORIX, Chubu Electric Power, and chipmaker ROHM. Toshiba's board said it approved JYP, or Japan Industrial Partners, 2 trillion Japanese yen bid, but stopped short of recommending it to shareholders, saying a special committee will further review the deal before the tender offer is expected to be launched in July. Toshiba said that they reached the conclusion that this transaction will reasonably contribute to enhance their corporate value if it leads to creating a stable management structure and if it can win unified support from shareholders. People close to several of Toshiba's largest shareholders said that they were comfortable with the formula used to value the conglomerate. At its peak last year, when higher bids were expected from Bain Capital and other global private equity funds, Toshiba was valued at 2.5 trillion Japanese yen. The board's approval of JYP's bid heralds the end of an 8-year saga featuring an accounting scandal, a brush with delisting, and a fire sale of the company's most valuable asset, the flash memory business now known as Kioxia. If it wins the backing of Toshiba's shareholders, the deal will lead to the company's delisting, a fate it narrowly avoided in 2017 when the failure of its US nuclear business took it to the edge of bankruptcy. As a result of its financial troubles, Toshiba in 2017 opted for an emergency issuance of $5.4 billion worth of new equity in a deal engineered by Goldman Sachs. The transaction radically altered Toshiba's shareholder register, packing it with a number of aggressive foreign activist funds who have called on the company to find better ways to unlock value. For the past 6 years, the company's largest shareholder has been Effissimo Capital Management, a secretive, Singapore-based fund run by Japanese managers that has applied heavy pressure on Toshiba. Shares in the Japanese group soared after it received a $20 billion take-private offer from a European private equity firm CVC in April 2021. JYP's latest offer represents a 21% premium to Toshiba's share price before CVC's offer came to light. After CVC's offer collapsed and Toshiba's plan to split the company was also rejected by shareholders, the group began soliciting new bids last spring, initially attracting interest from the world's largest buyout funds. But JYP was ultimately chosen as the preferred bidder in October, and Toshiba said no other fund submitted a concrete proposal. Some analysts had said a domestic consortium was more likely for Toshiba due to the strategic importance of its nuclear and other businesses. On Thursday, the company said JYP was unlikely to seek a major change in its business strategy and indicated that a buyout will not lead to the complete replacement of its management. At the same time, M&A bankers and lawyers said they believe that, once privatized, Toshiba will undergo a significant and potentially rapid restructuring and was likely to put a number of non-core units up for sale.